When you can't pay your taxes, your fears about what might happen or what you should do can be completely overwhelming. But in this video, I'm going to show you how to gain clarity, control, and peace of mind around your tax matter. I'm excited about what I'm going to share in this video because I've worked with hundreds of taxpayers who found they can't pay their taxes and get totally stressed out in the process. Take a breath and let's walk through this. Please hit the subscribe button below if this is the kind of information you're looking for, and ring the bell to get updates in the future on how to successfully deal with the IRS. So let's identify where you stand right now along the IRS tax timeline. And then let's overlay that with what the IRS collection cycle is. Let's start with the period between January and April. Have a return that's pretty much prepared, you see a balance due, you can't pay the balance, or maybe you can only pay a portion of the balance, or maybe you see some money coming due in the next 60 to 90 days. What do? Do you file the return in hopes that the money's going to come? In this case, I'd recommend that you file for an extension. So think this through with me for a second. What are the benefits of filing an extension? Well, first of all, the IRS automatically will accept your request to extend your time to file up to 6 months. An extension helps you to avoid non-filing penalties, which can be severe, up to 5% per month and topping out at 25% of what you owe. Plus, if we overlay the IRS collection cycle, you're completely staying off the radar when it comes to collections. The IRS doesn't know officially that you owe, so they're not going to begin sending you collection notices. On the other hand, if you don't file for an extension and just file your return, that begins a series of IRS collection letters. Each one gets a little more severe as time goes on, and after 90 to 120 days, you're going to get a notice of an intent to levy, meaning they're ready to freeze your bank account or garnish your wages. Unfortunately, I see far too many tax clients who freeze up and do nothing. Not filing is actually more serious than not paying. You heard me right. Not filing is a criminal offense. No one's going to throw you in jail for not paying your taxes. But if you don't file, it's actually a criminal offense. More importantly, they're going to start hitting you with non-filing penalties. And at 25% of the tax you owe, if you owe $10,000, your non-filing penalties plus the interest can be as much as $4,000 on the $10,000 that you owe. You don't want to go there. So again, filing for an extension is really the way to go, and yet a lot of people just freak out about filing an extension. This is not going to increase your audit risk. Statistically, it's proven year in and year out. You're not poking the bear. We're simply asking for an automatic extension of time to file. IRS is happy to give that to you. So go ahead and take advantage of it. You are going to give yourself a safety net to make sure the return that's been prepared is correct, gives you more time to find additional deductions perhaps, and of course, more time to get the money together. There's one really important distinction I want you to note, however. An extension of time to file is automatically granted, but it is not an extension of time to pay. Meaning, if you file an extension, you have until October to file the return. But in the meantime, if you file the return and you owe a tax, the IRS is going to count the tax as if the due date was April. So you're going to start accumulating interest on the unpaid balance, even if you file an extension. But is that really so bad? How much does the IRS charge in interest? Well, the interest rate is 0.5% per month. On top of that, they charge 3% plus the federal funds rate. Add it all together, 8%. Compare that to what it costs to borrow the money on your credit card and pay the tax. It's really a low interest compared to what you might be otherwise doing just to file the return and pay the tax to get the IRS off your back. So let's move further down the timeline. Let's say you're now in that October 15th time frame. It is time for the deadline to file the return. What if you still don't have the money? Should you go ahead and file? You should file the return even if you can't afford to pay the tax. You heard me right. Go ahead and file the return even if you can't pay the tax. I know this sounds counterintuitive, but if you want to avoid a non-filing penalty, you'll want to go ahead and get this return filed. It's October, you still don't have the money. What happens next is you get a letter from the IRS. You were expecting it. Go ahead, open it. It's simply going to tell you they've received your return, they didn't receive a check, here's your balance due. Your next step is to call the IRS and request a short-term extension on paying your balance. They will grant you up to 120 days. So now you've got another 4 months to come up with the money, on top of the 6 months you've already gotten on the extension to file the return. You're 10 months past the original due date. Technically, you're into the next calendar year. So you've given yourself time to come up with the money. What if you still can't come up with the money? Don't panic. 1 in 6 taxpayers is exactly in the same position you are right now, according to recent IRS data. So this is not uncharted territory. Other people have been down this road. We know what to do. Don't freak out. You've got 3 options. The first option is an installment agreement. This is a monthly pay plan where you agree to pay a certain amount to the IRS. It can be over 3 years, it can be over 6 years, depending on how much you owe. But they'll agree not to seize a bank account or freeze your wages in return for your making monthly payments. The second option is called currently not collectible status. This is where you put the IRS on hold for 2 years because you've demonstrated that you're in a position of financial hardship and you've provided documentation of your monthly income and expenses to prove to them you just don't have the extra money right now to make a payment. They will put things on hold and allow you to get back on your feet. And the third option is to submit an offer to the IRS to settle your debt for less than you owe. This is called an offer in compromise. It's not the easy-peasy solution that the national tax relief companies advertise it to be. There's a strict formula to follow. It takes about a year to process, but we've had cases where we have saved taxpayers tens, even hundreds of thousands of dollars by submitting an offer in compromise that gets accepted. So you have ways to get this resolved, whether it's in the early going, in the middle, or late, even after the deadline is passed and you still don't have the money. You can resolve your tax debt. We can help you. If you have questions or you need help, just email me at the email address that's showing on the screen so that I can help answer your questions. Here's the one thing I will ask of you. When you owe the IRS, it's easy to get down, get frustrated, get angry, get overwhelmed at your situation. I've laid out several options for you. Pick one. Don't sit still. Let's get busy. And if you put one foot in front of the other, you'll eventually say, bye-bye back taxes. And that's where we want you to be.